Hello! This is the Strifor channel, and today we'll tell you a story that changed the global financial system forever. A story about how one man challenged an entire state. And won.
Watch out, excuse me.
5 years ago today, the government faced one of the biggest financial crises in history.
It was incredible. You can hear wave after wave of selling hitting the market.
September 16th, 1992. An ordinary Wednesday for most people. But for the financial markets, this day became a catastrophe still remembered as Black Wednesday. On that day, George Soros made $1 billion in just a few hours, while the British government lost £3.14 billion. ERM, a trap for the British pound. In the late 80s and early 90s, Europe dreamed of a single currency. The road to the euro ran through the European Exchange Rate Mechanism, ERM. Currencies had to fluctuate within strict bands against the German mark, no more than 2.25% up or down. Britain joined the ERM in October 1990, setting the pound-to-mark rate at 2.95. This was overvalued from the start. The UK economy was in recession with inflation higher than in Europe. German reunification worsened the situation. West Germany had to pour huge sums into rebuilding the East, which fueled inflation. The Bundesbank aggressively raised interest rates, making the mark even more attractive. A vicious cycle began. Other ERM countries had to raise rates to defend their currencies. Britain, fighting recession and in need of lower rates, suffered the most. George Soros prepares the attack. By 1992, Soros was managing the Quantum Fund with around $7 billion. His approach was based on the theory of reflexivity. If enough people believe a currency will fall, it will. By mid-1992, the picture was clear. The pound was overvalued, the UK economy weak, and political will to defend the rate limited. In August, Soros built up a short position of $6.5 billion against the pound while buying German marks, which would strengthen once the pound left the ERM. September 16th, the day of financial war. That morning, the pound began falling from the opening. Soros and his allies started massive pound selling. The plan was simple: sell huge amounts, force the price down, and make the government either burn billions to defend it or quit the system. By noon, the Bank of England had spent billions in reserves intervening, but the market was stronger. For every pound the central bank bought, speculators sold 10. At 11 o'clock, the bank raised interest rates from 10% to 12%. At 14:30 to 15%. Still useless. By 1600 hours, the game was over. The government announced Britain's exit from the ERM. The pound lost 15% in a single day. Soros made $1 billion, while the government lost £3.14 billion. Think such trades are magic? They're not. It's market logic and cold-blooded calculation. But each trader had a tool, an environment to act. You have one too. The Strifor platform with over 250 instruments, including currencies, indices, and derivatives. Create an account, try it, and see what you can do. And if you want not only to trade, but also to earn extra income, there's a partnership program paying up to 60% of the spread from referred clients. Try a demo account and explore the platform. Link in the video description. The domino effect. Britain's exit triggered a disaster. That same day, the Italian lira was hit and also forced to leave the ERM. Next came the French franc, but France and Germany coordinated. The Bundesbank made huge interventions to support it. By the end of September, the ERM was in ruins. The fluctuation bands were widened from 2.25% to 15%, effectively ending fixed exchange rates. Lessons of the disaster. Black Wednesday shattered several illusions. Central banks are not omnipotent. In globalization, attacking a currency is easier than defending it. Political will cannot override economic reality. Markets became the ruthless judge of policy. Fixed exchange rate systems are not stable. They only work when aligned with fundamentals. Soros's use of the system's weaknesses was more than a strategy. It was a worldview, an analytical perspective you can train. On Strifor's Telegram channel, we've gathered 10 rules from millionaires in the book Market Wizards to help you think like a pro. Grab the free PDF. Link in description. Legacy and modern times. The story showed the power of financial markets in a globalized world. Soros won not by luck, but by understanding economic laws. Similar crises followed: Mexican peso, 1994, Russian ruble, 1998, Argentine peso, 2001. Today, risks remain in countries whose currency policies ignore economic fundamentals. The key lesson: markets are stronger than governments. Politicians can artificially support unrealistic rates for a while, but economics will prevail. For traders, it's a reminder of the importance of fundamental analyses and macroeconomic understanding. In finance, there are no guarantees, only analyses, calculation, and risk management. This was Strifor. Remember, in the end, the markets are always right. A trader's task is to understand their logic before anyone else.